24th April 2023, Monday. Guys, thank you so much for all the lovely messages and comment and advices and well wishes. I really appreciate that. Yes, and it is incredible to be hit with COVID for the third time. Oh my God, really? I mean, probably it's a vaccination has went off because I didn't take my third jab or fourth jab, but nonetheless, it's all right. I have friends around me getting the third time, even they went for the fourth or fifth jab. So I'll leave it there. But my more important thing is that I feel so sorry that I didn't come online to give you guys a TA view on last Friday because I was really not comfortable. So today I'm gonna undergo atone myself to give you more important stuff because I really think that this second wave is coming in, not COVID, but the recession wave, and it's going to hit us from May onwards, and probably you'll last and see the full-fledged by August, September. So all this information I must tell you. So let's just begin. Now, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, just remember that the 3rd of May, Wednesday, next Wednesday, the lunch with Cal is still ongoing unless something happened. All right, so as long as you put a comment in the comment box, we will select your name for the Spin the Wheel lunch with Cal this coming Saturday. Now, this place is at this 324 Changi Road. All right, we're going for lunch, so you need to be there probably by 12 o'clock. Then we have barbecue beef to take note. If you don't take beef, then it's really pointless to go. Yeah, okay, so it'll be like a 2 hours lunch. Okay, so if you are being selected, do make arrangement for that. Now, thank you guys for really the good wishes and also the comments, and I make the point to actually update you guys, reply you guys one by one. Okay, now of course there's still a lot to go, but at least I'm doing my part here. So thank you once again for those people who are sending me the writing in the good comments here. I really appreciate that. And of course, for those who have the thumbs up and the love button from me, that means your name will be selected for the Spin the Wheel lunch with Cal. All right, guys, thank you so much once again. More than 140 people have already signed up for this coming Saturday. This coming Saturday, 29th of April, 9:30 a.m. sharp to 12 noon. All right, you need to stay on from the very beginning because I will be sharing with you how to utilize the TWB crazy system. Yeah, you need to hear so that you will know how to use them. Okay. All right, so this is a use first, pay later scheme. So do come in and listen. Yeah, for those who are still wondering, should they come in themselves, just come in. It's absolutely free. You don't need to pay a single cent, and there's no much ties or some terms and condition, but it's quite, there's no money involved. Yeah. Okay, so do come in. Now let's just look at the numbers. Oh, sorry, some PowerPoint issue. I think I forgot to do the. Just give me a moment. Here we go. All right, let's recap what happened on last Friday. Okay, so the stock ended Friday session with little change. The Dow Jones up by 22, Nasdaq up by 14, S&P up by 3. Tesla recovered by 1.28% back to 165. I remember that you guys on Friday that for Tesla, just buy back some because there's some support at 160, but that should be all. In fact, itself, right, this coming week is a big one. Now, this week itself, right, we're going to have the earnings that are going to be very big. But one thing to note is that the major indices finish a week in red for the first time in 4 weeks for the Dow Jones. So that is actually could be a pretty good turning point for you to take note. Yeah. And also, we all know that the central bank will continue the rate hike, another 25 basis point in May, and another one later on. And in fact itself, right, as we know, about 76% of the S&P companies have already reported, and it's better than EPS, right? But the thing is this, the US market is not moving up. So that's a very big question mark here. So now this week is going to be a big one because we have Amazon, Alphabet, Meta, Platform, and Microsoft all coming out. In fact itself, someone did a calculation that this coming week, total market cap is about $10 trillion. Wow, that's very big, right? So in my opinion, it's like if the stocks doesn't perform or the earnings is not fantastic, any 1 to 2% itself, right, it's going to be billions of dollars of movement. Yeah. So what we have this week is incredible. We have today, before market open, we have Coca-Cola, Credit Suisse, Bank of Marin, this Washington Trust Bancorp. All right, that is before market. After close will be First Republic. Now, all these are the smaller bank shares, and I think that they will be affected. Yeah. And of course, Coca-Cola, we expect the numbers to also tell us about the current global situation right now. Of course, we expect Warren Buffett to make some money from the dividend, but it's still going to be a highly watched event. Now on Tuesday, we have McDonald's, and after close is crazy because Microsoft, Alphabet, Visa, Pacific Best, Western Bank, Texas Instrument, all of them is coming out, right? Chipotle too. And of course, on Wednesday with Boeing, we expect some numbers to drop. Meta and Roku, Meta should be okay, but Roku should continue slightly lower. I think the ADP is also one of them to take note of, but actually didn't circle it up. And of course, on Thursday, we have American Airlines, Caterpillar, MasterCard. And on Thursday, after close is Amazon, Intel, and Snap. And Friday, with all the energy, with ExxonMobil and Chevron, I do think these two will do pretty well. So in fact, if you ask me if there's going to be any selling in the US market, ExxonMobil and Chevron maybe can buy some before their earnings. Consider that. All right, now the thing is this, I know that I'm probably the only one in Singapore, if I say that, that has been, trainer level, has been calling for recession for the longest of time. And of course, some people say that I'm a doomsday guy, I'm a naysayer, but you must understand that what is real is definitely right in front of us, okay? The statistics, the numbers, the figures, the economics situation now clearly tell us that the chance of a recession is going to happen in August and September, which I said about 2 weeks ago. And in fact, I mentioned that employment will start to surge soon, right? So I'll tell you more in detail. But let's just go back again. In February, Yellen says you won't have a recession when the unemployment is at 53-year low. Now, she's not wrong, because when you have unemployment doing so well, you can't have recession. But the problem is this. If it's at 53 years low, the next thing may happen is that when this number is off the low, that means that if we have this unemployment starting to go up, right, that means that we will have recession too, right? So it's good to see on one side, but you have to be fair on the other side. And the reason why the Federal Reserve have been increasing interest rate at such a dramatic speed in less than 12 months is because they really need to bring inflation down. And if employment is at high, it's going to be very difficult to have recession, right? There's something we all know that. So, of course, she said that Biden's top priority is to reduce inflation. So if that is the case right now, how would you be able to have the economy being strong and resilient, especially now the banks are coming down in this manner? So that's why we can see from the Fed meeting minutes, right, shows that, right, we are definitely leaning towards a recession. Okay, this is something that we cannot deny. And of course, we all know that a lot of boys are actually placing their bet. In fact, JP Morgan strategy says that it could be a potential 15% drop in the stock market. But what we saw recently is incredible. It didn't happen, right? Well, it's because the Federal Reserve is just pumping $400 billion into the system. So on one side, they are kind of like telling the whole world, you know what, let's just bring down inflation. But on the other side itself, they are just feeding the inflation in one way or another by putting more money in the system. That's why now people are getting very worried of the US dollar. So as a matter of fact, right, this guy, Chris, he says that a recession is coming and the stock market wouldn't come through unscathed. So his point is pretty simple. He said that the LEI, all right, which I'll show you later, has fell by 1.2%, slipping to the lowest level since 2020. So this is the guy. And the thing is this, he felt that, right, it's pretty compelling and brutally bad leading economic indicators are showing it. So in fact, it's all right with the inversion of the Treasury yields and the current situation, everything you had in US now, you had a recession. So that is what he feels. Now, I feel the same thing, but I think that we can only see the full-fledged in September and October. But definitely, we are creeping slowly towards it. This is something that I can be pretty clear of. And you can see right now the 3-month Treasury versus the 1-month Treasury is really incredible. The spread itself is at 1.78%. Now, this has never been seen before. And this is really incredible. That means people are getting really, really worried, and they feel that something is really not correct. And look at this right now. This is the CBOE, the 10-year Treasury yields was the US dollar. Now, all along, they move in tandem until recently now, the spread between them is really, really huge. So if you ask me, it's going to be very difficult for the US dollar to crash because most likely they'll come back together again. So in my opinion, US dollar won't crash. In fact, when people realize that they need to pay back their dues to the US for the bonds and for their debts. They realize that they need to buy back more US dollar to pay, because only US dollar has the power to, US government has only the power to print, but the rest of people need to pay by the US dollars. So that's why I feel that by the increasing interest rate can only force the dollar to go up than down. All right. So this is very clear that the greenback may have more room to run. And in fact itself, right, they are feeling the the euro dollar is going to be very interesting. Yeah. Now, this is the Philadelphia, this is Philly Federal Manufacturing Activity Index. So we all know this is not really fun. Let's take a look here, guys. Let me just annotate for you. Now take a look here. You can see very clearly whenever the number goes below 30, minus 31, you can see back there we have a recession. Then we have another one again back in 1973. And of course, we have more happening in 1980. All right, and 1990, and year 2000, and 2008. So if you're telling me that you cannot see this is crazy, because every time when the Philly Fed Manufacturing Activity Index goes below 31, minus 31, oh gosh, guys, this is really going to see a recession. So of course you may say we're not there yet. It's like 31, it's not like go below it. Yeah, I understand. So you don't need, that's why I said that we are very nearby, but by August, September, that is where we will see the full blown of this. That's the reason why this is very, very clear numbers. You don't need to lie about this. This is history since 1970, 53 years of numbers. At the same time now, you can take a look at the change of LEI versus the real GDP. Both of them are moving, aging towards the downside. And that again concurs it, because in history, whenever you see something like this, whereby they move down together, it's undeniable. We're going to see a recession. Okay. So again, all this speak for itself, right? Everything speaks for itself that we are heading towards a recession. And of course, if you look carefully now with this coming from the conference board, the recession signal shows that this is the minus 4% level, and we are already below that. Hence, therefore, it is very, very clear there's no way we can get out of this. We are going to see recession very, very soon. So while people are still asking you to buy shares, buy it cheap right now, I really think that you just wait for a while. You can buy them cheaper. I am pretty sure you can get them cheaper later on. And then you buy them and keep it for some time, because we have seen this before, that bull market versus bear market. Bull market is always on average up by 160% in every bull market, versus the bear market is the average down as 40%. So if you'd ask me right now, if the market from the highest point can drop by 30% to 40% from the highest point, yeah, then it will be the best time to buy into the market. This is something that we have to remember so that we can prosper from this. Because now, let's take a look, guys. This is actually the monthly layoff, the 5-month moving average. And you can see that the moving average is actually creeping up. So to make sure that we get it correct, because I don't just see from other people's view, I check what happened. You can see now the US Challenger job cuts is really moving upwards. Okay, so this is something very similar that we had back in 2020 during the pandemic time. So what you can see on your screen right now is very clear. Once the numbers are shooting up itself, right, you can see that the S&P 500 will go down. It happened before again. It happened like this. So now that's why we are looking at this right now. And if these numbers continue such higher, then it is pretty clear that the S&P 500 will have to come down. All right. So again, all these are very clear numbers to show you. You just have to see whether you believe it or not. Now, this is a very interesting thing I picked up from the internet. I find it pretty cool. Of course, it's like not 100%, but hey, let's take a look. So this is actually the Wall Street cheat sheet about the psychology or market cycle. So what we can see, right, the market cycle shows that we are having this, where hope, we have optimism, belief, thrill, and euphoria. So we had the euphoria back then here. And then when the market pulls back, you notice that when it pull back in the real world, it pull back in the same way that what we saw on the cheat sheet. Very interesting. And then after that, you notice that it will try to recover, which is exactly where we are. And in fact itself, the very word that you're using is complacency. And this is something that we can be sure now everybody feels that way too, because they realize that, hey, come on, the stock market just can't go down. So there's no need to worry. In fact, it's time to buy. But the thing is this, once we breaks below the technical point, which is October low last year, we will enter anxiety, denial, panic, and capitulation. So to me, I'm not too sure we're going to see that the low here, like what you see in the picture, but if it's going to be a pullback of certain level, I think that will be a very good time to look to buy and keep. So this is my view here, that we can actually be careful right now, can take a sell position, or you can just get out of the market, wait for a while until the price is really, really good, then you buy and keep. I think that will be the best thing to do as an investor for the longer term. What do you think? Let me leave a comment in the comment box, yeah? All right, so we can see now the thing is that the corporate insider buy and sell ratio is also at the low end, and usually at the low end itself, right, we do expect the market to pull back. But the recent upside movement doesn't seem to show that, right? So that again caused a very big question mark what's going on here. And in fact itself now, you can see the market breadth now S&P is really at the lowest level since 2005. In fact, Morgan Stanley says that, right, this is really not a convincing bull at all, and imply that there could be further downside to go. And I can see from the chart, it looks pretty clear. When your market breadth is not there, what do you expect people to do, man? This is something crazy. And of course, right now, the speculators are extremely short on S&P futures. So of course, there's two views on it. Some people say, Kel, if it's so extremely short itself, right, that means that the market could rebound. Yeah, you can say that. That means that once the market U-turn, then these short sellers have to cover back position, then this will actually push the market to even higher level. But I want you to see this, guys. Take a look. This is the area whereby you can see that the short sellers was really, really, really heavily short, but you notice that the market was not really moving down yet. In fact, itself, the market only came down later, which means that the boys were selling the market while the S&P is holding. And then only when things are completely done in a way, if you actually watch the movie Big Short, you will notice that then the market starts to collapse. So what I'm trying to say is this: if the short sellers are really heavily involved, the market stops moving. So there's only two ways out. One, the next move is 5,000. If not, the next move is 3,000. So upside is 5,000, downside is 3,000. Which one do you think will make sense at the current moment right now? Let me know in the comment box, yeah? Okay, so the thing is this. I want to show you a very incredible picture that I found on the internet, and I think this is going to be very interesting. Just give me a moment. Let me just get my animation properly up. Yeah, I think there's some issue here. Okay, now this is the insider trading, okay? And the thing is this: the last time we saw something where it shoot up and it's so bearish was back in January this year, and the one next spike was back in August last year. Okay, so let's take a look now. Remember January and August January this year and August last year. Now take a look at the US market now. Oh my God, look at it. When the insider trading ratio was at the bearish side, right? You can see this is from the ratio of insider sales to buy reading, okay, from Thomson Reuters. You cannot deny this. You can see that the mid-Jan itself, after that, the market came down quite substantially, down by at least, in my opinion, by how much is that? About nearly 10%, if I see correctly. Yeah, around about 10%. In fact, yeah, this movement here. So in mid-August was worse. The market really came down from 4,300, dropped all the way to 3,500. So if you look at it, if things is going to tell you the same signal, then we are very, very near to the same thing. And that's why I feel that we should be seeing a pullback soon. And this should go to 3,800 to begin with. And anything crazier than that itself, right, we may actually see 3,500, which is the same October low. And if not itself, right, wow, this can be a whopping 3,200. So let's just take a look here. Of course, again, and just to be fair, the upside is still possible to 4,300, but based on the numbers, earnings, and the current situation with the crude oil price still at a high price right now, I just can't see the upside yet. All right. So with all this information, I'll see you on the TA side later. This is Cal signing off. Bye-bye.